What's up, entrepreneurs? So, question for you. Do you ever wonder as you're building your company, what your next 10 years is going to look like, what your next 20 years, 30 years? You look at these entrepreneurs who have been doing this a long time and successful for a long time. Where does that road lead? What does that life look like at the end of that long journey of grinding and hustling and building companies, maybe even selling companies? Well, I think, and this sparks my curiosity as an entrepreneur myself, to start to think about those things actively and start to talk about people who have done it, paved the way, what they're doing with their money, with their time, what brings them happiness. So I'm really excited to have a discussion on this episode about exactly that with an entrepreneur who's been doing this and successfully for a long time. He's a serial entrepreneur now doing insane deals, building franchises all over Texas, investing in real estate passively. Justin Sloan is an entrepreneur who, like I said, has followed that exact trajectory, and he's here with me as a friend to have a conversation about what that journey was like. And I encourage you, if you're listening to this as an entrepreneur, to think about what your own journey is going to be like over the next 10, 20, 30 years. So Justin, without further ado, thank you for spending your time with me and my audience. I know it's valuable. So I'm excited to jam with you, brother.
Yeah, thank you so much for having me on. Excited to talk.
Same here, and spoke briefly pre-episode about the massive deal that you're doing in Texas. So I'm excited to dig into that towards the end. You're not going to want to miss this if you're just tuning in. So Justin, let's just to kick this thing off, talk to me about your entrepreneurial journey. Obviously, you didn't start off passively investing in real estate and buying franchises. You probably started out like all of us. What was that like?
Yeah, I mean, I can remember back even, 13, 14, 15 years old and trying to do little side hustles to make an extra $10 here, $5 there, $20 there, delivering newspapers while also still going in and washing dishes at a job, finding a couple ways to make a little bit. And then when I got into high school, when I was going into being a senior in high school, I found cell phones. And that was really my first kind of foray, I guess, if you will, into making what you kill, right? Eating what you kill. And so the more cell phones that we sold, the more profit, the more commission. And so my senior year in high school turned into, 1:00 every day. As soon as I was done with school, I would go to the local mall and work till 9:00, sell as many phones as I could, and go back to school the next day, do the minimum amount of work, but then get to work and sell as many phones as I could, and kind of did that. And then after, started the college thing, kind of went down the path that wasn't for me. So I decided to make the jump into opening my own store, and figuring out how to try and be an entrepreneur.
I think you probably learned one of the most valuable skills in entrepreneurship first, right? And tell me if you disagree, but I think learning sales, obviously sales and marketing from an early age, I think is huge. And you were out there hustling, selling, talking to people every day. Would you say that sales is among kind of the top skills of entrepreneurs? Do you think that helped you?
100%. I mean, even to everything that we do today is essentially telling a story in some way, shape, or form. And I look at sales as telling a story because I'm not really here to sell anything. I'm more talking about what I'm doing and showing people what I'm doing, peeling back the curtain, and then allowing them to be part of the different journeys if they want. When I started buying real estate, it was just me, a little house, a fourplex, of this. But then as we've gotten into, syndicating and strip malls and absolute triple nets, essentially I'm just going and telling people, hey, here is where I'm putting my money. Here's my philosophy. Here's my thesis. Here's what I think is going to happen. Here's what I know I can do to make those things happen. If you'd like to come along with that journey, let me know. And now as we're getting into Everbowl and some different other, scaling options, it's my responsibility as the leader of the company to tell people what we're doing. I have a really good friend that says, there's no point. You could be the best you are in the entire world at something, but there's no point if nobody knows it. So part of my role is absolutely to tell the story about what we're doing, how we're growing, why we think the way that we think, why the actions that we're making, and then giving other people the opportunity. If they want to come alongside of it, let's do it.
The sales and marketing never stops, huh?
Never stops.
So you had the cell phone store. I guess this was college, early college?
Yeah, I was about 20 years old. I was running a couple corporate stores, so I kind of progressed up to the point of running a couple stores, and then realized that my position was kind of maxed out. I decided I wasn't going to go down the college degree path. At that point, you had to have a college degree to be a district manager, all this kind of stuff. And so I basically, I saved over the course of a period of time and took every penny in my bank account and opened my first cell phone store. I was the only employee. I worked open to close 7 days a week. 4.5, 5 months down the road, we finally started the idea of maybe hiring somebody and opening another store. And from there, over the next 12 years, we built that into a pretty solid regional company and, continue to scale other things from there.
It's a couple really important points that you just mentioned that I want to go back to is you were the only one working for a long time there. 7 days a week. I'm sure you were doing sales, marketing, you're doing like management of the stock that you had and just putting the full grind mode. And I tell a lot of entrepreneurs as they're starting out, it's going to be 3 to 5 years, no weekends. It's just you putting in the work, hustling. And you might not have been 3 to 5 years until you hired someone, but I'm sure it was a grind for that first 3, 5, and you said 10 years as you built that into a big company. Would you say, I mean, what were those 10 years like? You said 12 years until this kind of built into a big regional company?
Yeah, I mean, there's incredible ups and incredible downs, right? We open stores and we're scaling and everything's going amazing. And this is kind of at the point in life where not everybody had a cell phone. Maybe they had an old black and white phone or they had a radio, like some sort of, bag phone or something like that. But we're making the changes into flip phones and color screen and internet and all these kind of things. And so there were times in the business where it was unbelievable. When the first BlackBerry launches, I mean, there's lines out the door, right? And, when all these kind of things happen, but there's also the lows of it too. And so, one of the things that we had to do was start learning how to deal with extreme fluctuation. And later in the company's history, the company that I was selling started making some really poor decisions. They started selling off their towers in order to finance some, upgrades and things like that. And at the end of it, the company ended up losing about 30 to 40% of their subscribers in a 2-year period. So you want to talk about lots of ups and lots of downs, but that's why I so believe in ultimate diversification. One of the reasons that I'm so involved in as many things as I am is the kind of the final few years of our cell phone business were not the best. We made the decision that we were no longer going to continue to open more cell phone stores, but the business was still doing okay. And that's when I started getting into, what else can I do on top of cell phones? And started looking at every business, every franchise, everything. And this was right, after the real estate, this is about 10 years ago when the real estate, had really gone down. And I just saw a unique opportunity to start buying up some of the stuff around us that I thought was undervalued.
One argument that I get in with entrepreneurs, and I was a victim of this too early on, is I feel like when you're starting out, you get really starry-eyed and shiny-eyed about different ideas and companies and businesses, and it's really hard to stick to one thing. And you mentioned diversification. My question to you is, when is it a good time to think about diversification? Early on, as you're building your initial company, maybe you think about building multiple companies at the same time, or when you get to a point, like you said, you had established a successful company, a big regional office, and now it's time to start thinking about real estate. Walk me through your thought process there.
Yeah. Right now is the right time to diversify, right? If you had all of your eggs in any basket, if you had all of your eggs in crypto and stocks and this and that, in anything, you've seen a really big hit just in the last 12 months. Whereas what we're actually doing with our restaurants right now, because they're debt free, we're actually getting to go in and lease things at lower rents, things are now changing compared to a year or two ago. So one of the reasons I like being involved in so many different businesses and investment opportunities is that sometimes the timing of one thing is wrong, but the timing of another thing is right. When the market was as high as it possibly was 6 years ago and everybody's going and buying real estate, I'm going to be honest with you, I was selling some. And the reason why is people were buying real estate off of two things: the unbelievable low interest rates with the unbelievably high rents. Okay, both of them were record low rates, record high rents, which means if you're going to sell a property, you need rents to go up and interest rates to stay the same or go down. I just didn't see those things continuing to happen over the next couple years. So why I took and I chose to sell some of our assets that we've had great gains in. But while everybody's been buying real estate the last 6 months or a year, I actually took the time to peel off a couple layers and put it towards debt-free cash flow restaurants. I'm sure we'll talk about. And that to me is good diversification, right? Because we're intentionally moving things to different buckets. And through that, investing into other companies, investing into other real estate deals, continuing to be, I've got a mission to have 100 sources of income. And it all comes down to, I can't tell you how close I was to losing everything with that cell phone business. I put all of the eggs into the cell phone basket. I thought I trusted the people that were running the company. Every penny that, the more that we could reinvest into the company, the faster it would grow. So that's where we're putting all of the dollars. And then one day, brick wall. And so it's why diversification is so important to me, because it's not just important to me, it's also important to my employees. If we go all in on something and we have to pivot, we need to make sure that we have other things that can help funnel, help, promote that growth, give us the opportunities to try different things. So we are always trying as many things as we can, because if we do that and we're diversified enough, you can't push us over. Good luck.
I like that. And I just want to stay there for a second. I think we're talking a lot about investment diversification, which I love. I'm a big fan. I took a big hit between 2021 and 2022 as well. Crypto, stocks, forget about it. I learned a valuable lesson, as I'm sure a lot of the listeners did. And now, like I told you pre-episode, heavy into real estate. But as kind of starting out as an entrepreneur, it seems like one thing that you were, I guess, struggling with that was a roadblock for you is being dependent on the company that you were working with a little bit. They dropped the ball, that translated into your company, and there was essentially nothing you can do about it because you were so reliant on that one kind of distributor. And I actually did a video on this recently where a lot of companies that I see my colleagues in are very dependent on a specific social media platform or a very specific kind of strategy or trend that's good right now. And that, like your kind of cell phone business, I agree. You probably should be diversified because one day they can shut off the switch and your business disappears. So is there any hedge as a young entrepreneur, maybe you don't have the funds to diversify into real estate and commercial and restaurants, to protect your business from that kind of risk?
You want the ultimate hedge to stay in business?
Yeah.
Live under your means. I think where a lot of businesses get in trouble is they want these big fancy headquarters and this expensive conference room and all this beautiful things, but that none of that actually makes the business churn and makes the profit there. So, as we've grown businesses, one of the ways that we've been able to kind of get through everything is being lean and nimble and not intentionally overspending, but making sure we know where we're spending those dollars to get the highest ROI. But there's nothing better than sweat equity. We talked about it earlier, like the first 3 to 5 years, as you said, is getting in there. And, yes, I'm the owner of this business and multiple locations, but I'm in there working shifts and selling cell phones just like everybody else. I'm taking the trash out at night and wiping down the counters and reordering car chargers. Why? Because how do I duplicate something if I don't even know how to do it myself? Even right now, I can still step behind the counter of an Everbowl and go make some acai bowls. And I do it all the time. I was just in a store a few hours ago, checking up on things, paying attention. Why? Because if I want to scale this into being 50, 100 locations, I need to understand those little things that move the business. And it's only fair to my employees that understand the things that I'm asking them to do and understand the why behind it.
I agree. I think that's so powerful. And, we did the same thing in our company. You have to learn every aspect of your business firsthand, or how the hell are you going to train anyone to come in and take over that responsibility? Very, very important. So let's talk about kind of after the fact. You've got the cell phone company. It's been 12 years. You had some money saved. You invested in your first real estate property. Is that accurate so far?
Yeah. So kind of like I said, brick wall happened. The writing was on the wall that I do not want to put any more money into opening cell phone stores. But like I said, the stores were still there. We had very little or no debt. So there's still cash flowing. It didn't make sense to shut them down. It made more sense to look at some other ways to put money to work. at the same time and diversify. So I started, as I said, researching everything that I could. And I happened to be talking with the right person at the right time that said, why don't you look into real estate? He said, every wealthy person I've ever met owns some real estate. And so I said, okay, but I don't have time. I'm still working in my stores. I'm still doing this. And he said, hire a property manager. And I was so naive and so early on that I literally said, what is a property manager? I had no idea that you could hire someone else to manage your properties, to deal with the tenants, et cetera. So I flew home, and literally on my flight home, I'm Googling local property managers. And I sent an email to as many as I could. And I said, I'm looking at buying real estate. I want to find someone, that will run the real estate. Can we meet sometime in the next week or two? And a few of them took my meetings, and then I started asking, how do you manage? Why do you do this? Comparing all of them, and essentially found one that I felt pretty comfortable with. And just like that, we're off to the races. Buying a little house here, a little fourplex over there, a little house here. A few months later, another. Right? And these are all $80,000, $100,000, little slab, tiny, but they rent for $1,000 a month. Interest rates were pretty cheap. The houses were 120, now they're 90, because the market had recorrected at that point. So I'm like, hey, I know I'm buying it at a discount compared to where it had been. And so a lot of things just started making sense. So we just started chunking along. And then at one point, an opportunity became available to buy a strip mall that was one of my first locations that we were in. And I knew the strip mall like the back of my hand. I knew real estate at that point, money in, money out. Commercial was a little different. And we finally made that big jump into being a commercial property owner.
Buying a strip mall, that is a massive move. Scary. Talk to me a little bit about, I guess, your real estate journey in general. When did you start? Was timing important for you? What year was it? And for practical advice for listeners here, is there ever a right time to start investing in real estate?
Sure. So my timing was pretty good. It was 10, 11 years ago. So, the '08 bubble happened. Right. We were kind of coming out of that. Everyone was still scared of real estate, uncertain. But the property that I purchased, when I say I know it like the back of my hand, I literally was in there 20 hours a week working. I knew the managers at the different places in the strip mall. I knew the traffic. I knew everything. I knew that strip mall, the problems that we had with it, the good things. So it was a really good learning jump, big jump in dollar amount, but essentially the learning was more of, hey, rather than having this and this utility, you've got snow removal and dumpsters and different things like that, right? And so just understanding leases a little bit differently, but I had rented a lot of spaces. I knew leases. I knew this process. And so, regarding when is the right time to go buy real estate, so the biggest thing that I would say is there's never a right time, but there is a wrong time. And the wrong time is to go quickly all into something, right? And this is where I've seen a lot of people make some mistakes. And honestly, even some people in the last 6 to 12 months, they were buying $100,000 and $200,000 houses, and all of a sudden they're buying, 10 times the real estate, and their portfolio is all based upon 2021 and early 2022 pricing. And so one of the things that I would really recommend to people as they go through this journey is, why not you just bite off a little bit? Why don't you buy one rental house or go in with a friend, maybe passively invest into another deal so that you can see how it works. You get those quarterly updates, you get to read, hey, here's this, and learn, because if you go all in at the wrong time, you only get one chance at that. And a lot of people have chosen over this last 18 months to go all in, but I actually think it's much better to buy 1 or 2 properties every year rather than buy 10 properties one year and nothing the next year, because you want to dollar cost average into everything. It doesn't matter what kind of investment it is, whether it's stocks, crypto, real estate, whatever. You never want to just go all in on that one thing at that one moment, because as the price changes over time, you want an average of that price to be your portfolio. You don't ever want the chance that you only bought at the top. And I think a lot of people that bought in the last year or so, whether it's crypto or stocks or whatever, they got all this money inflow from our government and chose to go all in on Bitcoin at 62K, right, or all in on Amazon. And like all of a sudden it's like, well, it's down 40%. Yeah, this is the way markets work. You know, when everybody's buying stuff, it's probably when you should be selling and looking at taking a little off the table, keeping a little bit more capital. Now, now all of a sudden everyone's like, I don't know, Bitcoin is just too risky. I'm like, wait a minute, you're screaming about it at 60 some K. The fundamentals haven't remotely changed down here at under 20K. So to me, every dollar I put in, I'm getting to buy 3 times as much Bitcoin. Why? I mean, that's 3 times the value. But you know what? Because the market's changed, because the economy's changed, all of a sudden people look at something that hasn't changed, but in their mind it's changed. And that's where the real opportunity is. The people that are consistently buying Bitcoin at 60K and 20K, those are the winners, because they're going to average out, and they're going to average out to the lower end. The ones that just bought 2 Bitcoin and went all in or whatever they did, because I know many of these people, and they went all in because they had to be part of it and they couldn't miss out. But by having to be part of it, you're pricing yourself at a specific top of a market, and there's consequences from that.
I always wonder, is this a lesson that you had to learn at one point with your own money? Because it's such an emotional roller coaster when sentiment is really high. And this was my first, I guess, economic downturn as an active investor, and I lost a ton of money. So I'm wondering, during this one, yeah.
Yeah, I mean, here's the reality, right? I mean, some of these asset classes were newer, right? I mean, I've been into crypto for a decent amount of time, but my knowledge, being into crypto and really understanding crypto is a process.
Right.
And if you look at the cycles of Bitcoin and of crypto, most people have been through this cycle once or twice or 3 times. And the ones that learn are the ones that understand what causes Bitcoin to change, right? What causes Bitcoin to go up in value or down in value is liquidity in our overall markets, and then also the halving, right? So around those certain time frames, that things are going to change fundamentally, and et cetera. So, I mean, yeah, long story short, I lost a ton of money. I still have tons of money locked up in Voyager, and, I'm with a lot of people that, unfortunately partnered with good companies that made bad decisions. And what does this all circle back to? What do we talk about?
Diversification.
Diversification. Because you know what? My employees don't have to worry about getting paid because I bought a bunch of crypto. Why? Right. Because we diversify. I still have my real estate. I still have all these other venture investments. We still have this. We have all these different things. And we're continuing, and we still have cash flowing great businesses that are continuing to buy these assets. Because the one thing you don't want to do right now is, scream at the top of your lungs that you love Bitcoin at 60K, but then not buy any at 20K. Because now all of a sudden, but what's going to happen, and just wait, this will be a clip in 2 years, is we're going to be back to 40, 50, 60K. And everyone's going to be like, I don't know, I saw this before, this happened, it crashed last time, or the opposite is they're all going to pile into it at the new high. We're going to get to ride this thing again. And it's just these continual cycles of people want to invest in things when they're going up, but yet when everybody runs away from them, that's where the value is. People are running away from real estate right now. I mean, it is a absolute standstill. Guess what? Why do you think we're opening more restaurants? Why do you think we're beating up these landlords a little bit more? We're getting less rents, better deals, because less people are opening businesses. I mean, interest rates are 7% compared to 3% a few months ago. It's more expensive. Construction's up. Employees are up. Everything's more expensive. So these landlords are going to have to start lowering because they can't have vacancy. Vacancy kills property. So they're going to have to start lowering. Hi, I'm Justin. I got a great brand. Come give me a good deal. And they do it all the time.
It's such a battle with your own emotions, like watching everybody and the sentiment go up. Everyone's shouting buy. It's hard not to, but you're right. The longer you've been around, the more experienced you are and the more kind of logical that you invest, the better off you're going to be. And again, it's easier to learn that lesson with your own money. It sticks much better.
Yeah, diversification helps though, because it helps you see the weakness in other things. If I was all real estate, I would be touting how much, record rents, record this, record everything. But as a tenant that also signs leases, I get to see things from the tenant side. Hey, what's the risk reward with opening a business in this climate? What's a risk reward with, hey, this landlord just raised their rents by 30%. Is that really still worth it to get the kind of sales that we, and there's just, the more that you're diversified, the more that you're going to be able to say, hey, one man's trash is another's treasure. And there's ways that you can benefit from being on both sides of those deals.
What other, I guess, streams of income are you diversified into? You've got the real estate. Obviously, you're investing in stocks and crypto. Are you still running the cell phone business, or is there a separate company that you're running?
No, so Sloan Capital is our parent company that does a number of different things. We're always buying a little bit of real estate every
Hmm.
year, all the time, no matter what. And I plan on doing that for the next, I don't know, until I'm old and gray and beyond then. The main thing right now is Everbowl. That's the biggest cash generating, debt-free business that we're doing. And we do that with partners. But then I'm also invested into, I don't know, 14, 15, 16 companies somewhere in there. And it's a crazy different things, right? It can be everything from a ranch out in California, a cash flowing event kind of ranch, to businesses, to tech companies, to, other real estate deals. I love to be part of other syndications because, again, it's more diversification for me. And one thing that I'm really big about is, I've got a very core competency. The types of properties that we buy, the restaurants that we're scaling, how they, it's a very core niche that I'm good at scaling. But there's other people that are really good at scaling other things. And although I'm good with income producing investment properties and triple nets and strip malls, I'm not a land guy. I'm not a development guy. I don't do certain things inside of real estate. So why don't I put some money with people that are good at that kind of stuff? And then a lot of times what happens is we just all invest with each other, and you root, and all of a sudden you've got a core network around you of dozens of people that just want each other to win. And we're kind of all doing it together.
That's such a cool thing. You mentioned a couple of these other companies you're invested in. Is this, like you said, friends? Are these companies paying you annually, monthly? Are you getting a portion, or are you just kind of holding equity until they sell? Walk me through those deals.
Again, so diversification is we've got lots of different buckets inside of there. We do hard money type of things where you're guaranteed interest rate, right? Every month I just get distributions into our account. Some of them are shares of a company. So as the value of the company changes, we have different options for exercising some of those shares and whatnot. And a lot of it is things that at some point, hopefully they hit. I love early stage stuff and investing in where I think the future is going. It's one of the reasons I got so involved with Everbowl is, not only do I think that eating healthy and eating things that are, made from Mother Nature is important right now. I think if you fast forward 3 to 7 years, it's going to become more and more and more popular. And if you look at the major cities that these concepts have already started, and that's exactly what happens, is it becomes a normal thing. And so I like to invest into not only where we're at right now, but also kind of where we're heading in the future. And again, I'm bucketing things, and like my obsession with diversification is scary, even to the point of like the tenants that we're signing all are expiring at different times, right? What if I would have had all of my tenants with leases that expired in 2020? Okay, I can tell you just the leases that we did have, I had 40 some, I was like 44 or 46 tenants call me that they were going to go out of business from COVID. What if they all actually had leases that were going to expire in the next 3 to 6 months and they just bailed on their businesses and left, right? But fortunately, many of those leases didn't expire. So we could work deals to get them through these different periods. And I went from 40 some people that thought they were going to go out of business to we had one that left in the middle of the night. Wow. When we lost one business all through COVID, we figured out a way to make everything else work. Why? Because I was diversified. We could do different things. We could keep these tenants in business because what's the worst thing for real estate owners? Vacancy. And I didn't want to kick every tenant out, redo everything, and go through it because a lot of these tenants have been my tenants for 5 to 10 years. Now the second that things get hard, I'm just going to kick them out. I'm a tenant myself. The businesses I've been involved in, I wouldn't want a landlord to just kick me out. Why would I do that to them?
With 100 streams of income as the goal, I can tell that you're definitely obsessed, and I think that's awesome. Let's circle back. Let's dive into kind of the process to get to where you are today, which is Everbowl. The cell phone company had some issues after 12 years. You were lucky enough to save some money, start your real estate, empire that's been going on for a decade now. You've been building this portfolio of properties, commercial, residential, and I'm assuming that's kind of the main driver of income now for you. Is that correct?
Yeah, absolutely.
Awesome.
Yeah, my real estate is what allowed me to put the final key in the final cell phone store and essentially walk out. And for a couple years, I kind of did nothing. And then I got bored.
Did you like the doing nothing period? What was that like for you?
I hated it. In a weird way, right? So I lived right across the street from a golf course. And I can remember, I would literally get a notification that a friend of mine would tee off and grab my clubs. And they, by the time he got to hole number 2, I'd walk down my driveway and hop on. And, I can remember that summer playing 80, 90 rounds of golf. And the next year, every turn, everything that I could. But all of a sudden, my hobbies kind of became my job. I love to build things. I love to golf. But when the highlight of my day was, I hit it to 10 inches on number 8, it's a little different than saying, oh, we're helping build a company where we're going to have hundreds of employees and make big, massive change, And so, I've done some consulting and little working with a few different companies, but, really wanted to make sure that I was doing something for myself. And when I found Everbowl, which was right in the middle of pandemic, it just kind of felt like one of those Slumdog Millionaire kind of moments in a weird way, where like I've got really good experience in running a business. I know real estate and construction like the back of my hand. We were entering this weird phase of opportunity and growth in the world. And so it's why we kind of took a big chunk of this one.
And let's dive into the Everbowl, because that is huge. I mean, obviously now you're doing big daddy deals, the exclusive right to open Everbowls in Texas. It involves real estate. I agree with you. I think we're trending toward more Whole Foods, acai bowls. As I told you pre-episode, that's my breakfast every morning. And I think it's gonna continue to grow, and more people are going to feel this way about health, or we're becoming a more health conscious society across the entire country. I think your head's in the right spot for sure. How did this fall into your lap? I mean, this is big. It's crazy. And getting the exclusive rights to Texas, wild. Walk me through how this happened.
Yeah. So right in the middle of COVID, a friend of mine said he's going to host an event in Phoenix and get some business owners together for a week to talk about the weird stuff that's going on in the world. And let me tell you, we had to change venues a couple times, hotels refusing to let us get together. But the final day of this event, he rented out the the Diamondback Stadium in Phoenix. So literally an entire baseball field, and there was about 80 of us, and we're literally hitting on the field and throwing with players and all this kind of stuff. And right on the first baseline is an Everbowl setup. And they had just expanded into Arizona, and I sat there, and I still have the picture, it's on my social, of when I ate my first Everbowl. And I had never had an acai bowl. I look at that bowl and it's not even acai in it. I don't remember what I put in it, but like I was so new to this idea of these fruit bowls. I'm born in the Midwest, meat and potatoes, used to, Chipotle and that kind of good stuff. But what was interesting, I ate this bowl, and like a couple hours later, I had some energy. You didn't feel like that kind of groggy, whatever. And it was so good. And I was like, this is vegan. And this is like, and I'm not vegan. I'm not remotely into this kind of stuff. But it just kind of made sense. And I got to know the owner pretty well. And within like a week or so, I flew out to San Diego, and I said, tell me more about this. What are you doing? How are you growing? What's this? And most of their restaurants were located in California. And let's be real, California was not kind to restaurants during COVID. They were not allowed to have customers cross their threshold. They had to shove every table up to the front of the stores. It was very inconvenient. And Jeff Fenster looks me right in the eye and he goes, and this is the exact time to scale this business. When everybody else is going this way, here's what we're doing to go this way. And they did things like scale up their ability to build the stores, right? So they've got a partner company that quickly builds out the location so that they can scale faster and cheaper. And they worked on some menu innovation and some supply chain things and all these kind of things that took them. So during the pandemic, they doubled in size. And now off to the races as we open at least one or two every single week across the country. And it's just going to get, even more crazy from there. So got to know him, visited a lot of the stores. And, as we started talking about territories that were open and possibilities, being from right here in middle of the country, I said, there's this big state called Texas. Let's figure it out. And that's what we did.
And how long ago was that?
That was January of 21, so 18, 19 months, give or take. We opened the first store in Dallas then in September, and just opened a third one in Dallas and a fourth one opening this week. So within about 13 months of the first one opening, we've now actually outpaced our closest competition in the town, which is nice.
That's awesome. And this is a kind of a much different deal than your typical real estate deal, right? Like you're opening these franchise stores all over Texas and you're recruiting, I guess, franchisees to manage their own stores. What is the business model here?
Yeah, so there's a couple different things. So we have our stores that we're opening ourselves, and we syndicate those stores. So we raise money and we give people ownership, and we use a really similar model to real estate. Because these are quick serve restaurants, you don't want a really expensive GM or head of ops or anything at a small store. So we use a management fee structure. And a lot of my real estate investors ended up being being investors with us in the restaurants as well, because because they're debt free and we use the management structure, we're able to create a consistent cash flow to our investors. And that's what our investors want. At the end of the day, some of the tax benefits and some of the stuff over here with real estate can be a little bit more lucrative, but cash on cash and, putting money actively to work that we control without debt it's a big deal. And while our competitors have thousands of dollars of debt on every single store, we're distributing that to investors every month instead. And it's allowed us to grow at such a faster rate. But then Texas is huge, right? If it was its own state, it would be the ninth largest, or if it was its own country, it would be the ninth largest in the world. And so when you think about how many Everbowls we can put in Texas, there's no reason for me to do it all myself. We would have to raise tens of millions of dollars, build humongous teams. And so what I would rather do is work with other people that are passionate about bringing this brand across the state. And so, every week we're talking with potential franchisees. Like I said, this Thursday in a few days, we're going down and helping another franchisee open. We're always having them in the works. And it's our job to not only help our stores be successful, but then to take that same structure and tools and help our franchisees be just as successful. And, in a city like Dallas is 100 miles across. Why do I need to put everything there? There's no need for one person to do everything. So we're going to find a couple other franchisees. We're all going to open X amount. We talk about that as we go through the process. We divide up the territory. You've got that. I've got this. You do this. And then what we do? We just all go to work and do our best job to serve people delicious bowls. And what happens when we do that? You get another phone call of somebody else that wants to open another one and another one and another one, because they see what we're doing and they want to be part of it. And I love the idea of allowing more people to be part of it, whether it's through investing with us and getting to help support that growth, being a franchise with us, whatever it might be. This is one that we're really going big on.
Super exciting. And I know it's relatively recent. We started this in 2021, but what's the progress been like so far? And do you have any goals for the next, 5-10 years for how many stores you're looking at?
Yeah, so just last week, so it took about 13 months. We opened our fourth location that we corporately own, or Sloan Capital owns and manages. We have at least 8 slated for next year that we will own, and possibly as many as 10 or 11. And then I think we'll have at least 4 to 6 franchisees. We'll see. There's different delays that happen with construction and this and leasing and all these kind of stuff. But right now, the work has been done that next year is going to be silly successful no matter what. And the beautiful thing is, like I said, especially with the way that we're launching, we're doing it debt free. So as we enter this really weird economic time and there's all these people that don't want to do anything, we're sitting here with cash ready to open restaurants. And these landlords are giving us great deals. We're able to create, we're able to grow when others are shrinking, and continue to position us for many, many, many years to come.
Super cool. I'm excited to follow the journey. And if I'm ever in Texas, I'm going to stop by and get an Everbowl. I love acai. Let's talk for a minute about entrepreneurship in general. I'd love to hear some of your thoughts on motivation for one. Like, entrepreneurship is weird. That we're all crazies. We're totally going against the grain since childhood. Is there any one thing, maybe something that happened to you as a kid, or an experience? Like, for example, I went to jail when I was 17. That was like my, oh shit, I need to get my crap together. Everyone thinks I'm going to be a failure, that triggered me into, I guess, becoming this new person, transforming, going against the grain, and giving me the fire that a lot of people didn't have to do something wild. Is there anything like that that you went through as a young entrepreneur?
So mine was kind of a mixture of what I saw around me mixed with choices you don't really have a choice but to make. So I was raised single mom, 3 boys, and my mom was the hustler. I mean, the definition, 6, 7 jobs at all times, but she worked really dumb. And what I mean by that is, it was a let's trade an hour of labor for an hour of pay. It wasn't let's build something that can ultimately pay us when we're not there. So it was delivering papers and then going and serving and then going and doing a secretary job and then this business and separate Avon and packing little medicine into boxes for gas station. I mean, anything that you can think of. And my brothers and I were there to help. And it was expected that we helped with those businesses. We delivered the Avon orders, we delivered the papers, we helped with the things. We did everything that we could because that was life. And as we grew up, if you wanted to have something extra, if you wanted to buy some new clothes, if you wanted to whatever, you better figure out how to make some money in order to be able to do that. And so it really wasn't like, hey, I'm figuring out different ways to hustle because I want to. It was, I didn't want any more hand-me-down clothes. Right. I wanted different options. I wanted, and that's why, when I had that first taste of commission sales, it made me look at business completely different. I'm like, wait a minute, I can actually, if I work more, if I work harder, if I learn stuff and I'm a better salesperson, then I can make more. And I still remember the look on my mom's face when I was a senior in high school and I made more money on my W-2 than she did. And it was one of those moments, but that's, how do you learn it? You learn it from seeing it and doing it and working. And I've never been afraid to go work and keep my head down. And then from that, good things happen.
100%. Now, was there a mentor or a guru? It could have been someone online that helped you through your journey, helped you learn sales, marketing, entrepreneurship, motivation. And if you could mention somebody that the audience might be familiar with, that would help too.
I'm not sure that I have one specific person along the way, but I think that social is, I went and spoke with a group of seniors in high school in an economics class, and the leader of the class was just ripping apart social media, telling the kids to stay off of it. It's a waste of time. But then I go in my social media and I look at who I'm friends with and who interacts back and forth and this world. And I think, wait a minute, like we're doing some really, really cool, amazing things together. And so I wouldn't say there's one person, but there's something you can learn from everybody. And there's so many people out there that are putting out such amazing information that you can learn anything that you want. When I started learning about real estate, I was on Bigger Pockets every single day. I mean, every podcast, every forum, asking every stupid question I could. Why? Because that's how you get smart. I always use the analogy of real estate's a lot like fantasy football. We're trading players. We're looking at stats. We're paying attention to all this kind of stuff so that when that great player comes along, we're like, that's a good one. I want them on my team. And essentially, as I've gone through learning different things and even restaurants or this or different businesses and venture, you find great people around you that are doing it. 2 weeks ago, we had the first Everbowl franchisee summit in San Diego, and everybody that owns an Everbowl and everybody that's thinking about owning an Everbowl came to San Diego. And for a few days, we just sat there, had some speakers, had some open conversations and talked about how to be better. How do we grow our businesses together? How do we win more together? And so I would say that as people go through their journey, try and find some other people that are doing something kind of like you want to do. Follow along, message them, ask them questions, why not? What's the downside? There's absolutely no downside. And if you can learn by asking and learning from other people rather than going and figuring it out yourself, that's definitely a shortcut.
And that's what this show is all about. Mentors Collective. Go find a mentor. If there's something that you want to learn, social media is the best possible place. There's always somebody who's one step ahead of you who knows the answers, who's going to help accelerate that. So don't write off social media. Go follow people who inspire you. Interact with them. Justin's a good example. Go follow him at Sloan Capital, and myself as well. I'm always happy to help anyone who's listening, who has questions, wants to grow, wants to better themselves. So on that note, Justin, I'd love to kind of wrap up here. Is there any one piece of information that you wish you knew as a young entrepreneur that you'd like to instill onto others?
So I kind of go through different themes in my life or in business. And one theme that I'm really dialed in on right now is, we're doing lots of these grand openings, and I get lots of texts like, oh, it looks like such a great, amazing night and all this kind of stuff. But every business really boils down to a simple thing of, are your customers likely to return? And because returning customers will also refer other customers. And so as we go through these phases of big grand openings and all this excitement and all these kind of things, I think it's much more important to remember that at the end of the day, nothing matters other than what's the likeliness that our customers return. And when we're serving these bulls, when we're even in real estate, if we're helping somebody with a transaction, we're purchasing, we're having an investor with us, what's the likeliness that they would invest with us again? What's the likeliness that somebody would buy an acai bowl again? What's the likeliness that an employee would want to work for us again? And when we're focusing on all those kind of things, rather than the grand openings and all this kind of fun stuff, if we're really focusing on, hey, do our customers, our employees, our investors, are they likely to want to do business with us some more, to refer us to some other people? Because if that works, everything else works itself out.
I agree. I think it's the most important data point businesses can track. And if it's a service, retention, and like you said, how willing is somebody to come back, refer, 100%. Great piece of advice. Justin, for people who want to connect with you, hear more from you, maybe send you a message, where's the best place to do that?
I'm pretty active on Instagram. I just started a year or two ago creating some stuff on there and meeting great people like you. So Instagram, Sloan Capital, our website, sloan-capital.com. Feel free to reach out on the connect form there. And I always love to meet more people, expand the network, talk with other people that are doing great stuff. So please reach out, connect, shoot me a message, tell me to follow you back. Let's do it.
Cool. And Justin, I appreciate your time. I know it's valuable coming to share some wisdom with the audience here and obviously make a connection with me. This is why I do this. You're awesome, and I hope to maintain this. And if you're listening and you found some value, go shoot Justin a follow. Obviously, subscribe and leave a 5-star review. Justin, thanks again. This has been fun.
Yeah, thanks, man. Appreciate it.